If you're struggling to understand how the perpetual and periodic methods of keeping inventory transactions actually work, this video will explain the detailed journal entries so that you can later use, particularly the most popular perpetual method, in your future accounting units. When you study Act 19061, Advanced Financial Accounting, we will use the perpetual method when we consolidate the inventories of various companies into a single inventories account for a group of companies, as Wesfarmers has done, for example, with inventories of Coles, Bunnings, Target and Kmart. We will look at the journal entries when we purchase inventories, and also when we sell inventories, for both the perpetual and periodic methods. When we purchase inventories for cash or on credit, under the perpetual method, we debit inventories, an asset, and debit GST paid, and credit cash or accounts payable. Under the periodic method, we debit purchases, an expense, and debit GST paid, and credit cash or accounts payable. You will notice we generally do not include GST in our assets such as inventories and expenses such as purchases. We keep it separate in GST paid accounts. However, we do include GST in accounts payable and cash. See the video on how we account for GST for more about how we deal with GST in accounting. A firm purchases inventories to sell them. For Coles, a subsidiary of Wesfarmers, its sales typically occur at its checkouts in 800 supermarkets spread across Australia. Coles uses the perpetual method. Every time a sale of an item of each product of inventory is scanned into Coles' accounting system by one of its checkout operators, while we stand by them at a Coles checkout, this is what is happening. For each item sold, we debit cash or accounts receivable and credit sales and GST collected for each item. The recording of sales would be the same under both perpetual and periodic methods. As Coles uses the perpetual method for recording inventory transactions, there is more bookkeeping than simply recording the sales that our checkout operators are doing as they scan in each item. They are also recording the cost of goods sold as they scan in each item. The costs of each item of each product, based on the cost formula which Coles is using, which is weighted average, is debited to cost of goods sold, an expense, and also credited to inventories, reducing inventories, an asset. For firms using the periodic method, there are no journal entries recording cost of goods sold. This video has been designed to help you reinforce some of the key concepts from your reading of Chapter 4 in the study guide. For further information on how we account for inventories, go back to Chapter 4 in the study guide and also review the Inventories weekly questions. Also answer, write and rate questions on inventories in Peerwise.